in the end, it's always about also accepting that it doesn't work all the time. So I think that's something that I've seen, especially after working with other traders, is that making sure that you understand that there are trades that just look perfect and they don't work out, and that you're okay with that is helpful for your long-term development. Otherwise, what often happens is that the traders start tweaking stuff, trying to see, okay, this trade didn't work out, what would have made me avoid this losing trade? And then they adjust their strategy, but then you have a lot of problems with that as well.
Child idea is that as children, we have a need. We have 6 human concerns. 3, which they call the survival, which is connection, love, significance, and certainty. We don't want to experience pain. We treat normal as being pleasurable and anything outside it as being painful. That's why we're reluctant to move outside the comfort zone. So as children, we come out like that. We're born with these human traits, and then of course we get treated by our parents in different ways. And what happens is we don't get enough connection, we don't get enough love, we don't seen as significant enough, or we everything is changing for us, so we're in constant pain. We respond to that in different ways. So that's one way of looking at it. So taking it to trading, for example, let's say, for example, we treat loss as a lack of love. We unconsciously do this. So we will say we won't take a loss because if we take a loss, we're not loved. So we're just going to hang on to losses as long as we can, which accounts for why we hang on to losses for so much. Or fear of missing out. I'm not significant enough. If I miss out on this huge trade, which is going to make me the best person in the world, I'm going to hang on to this because I know it's going to turn in my favor. These are all unconscious belief patterns that we're responding to because of how we grew up. So when it comes to Russell Kennedy, he says, be aware of the thought, that the circumstance that triggers that. And then you need to take some bodily, he goes into it, some bodily responses into that. So for example, let's say you see something, you're in a trade and you start seeing the trade go against you, rather than say, because that's what I teach, you've got a hard stop in place, you should have a soft stop, which means you exit the position in terms of time and structure. Rather than execute that, so take a quick loss, you keep, I'm going to hang on. And somewhere at the beginning of that move is a thought that triggers those actions. So if you can catch that awareness, that thought that triggers, and become aware of it, then you take a bodily response. So for example, you might just get up and walk off the chair, or take deep breathing. Just do something that will trigger a response that will keep you within the plan that you have. So one of the things that I teach my students is to just get up, just stand up. If you're day trading, just stand up, and that process of standing up triggers the bodily response to say, this market's coming off. Is it doing what I thought it ought not to do? If the answer is yes, I'm out of the trade, take a loss. Or yes, it's not doing what I think it ought to do, but it's not triggered my response yet, so I'm going to hang in there and wait, and so on. So that's the way that I'm looking at Russell Kennedy's ideas.
So trading, for a lot of people, it starts as a hobby, and that's very important to remember that, it does look like a hobby and does look like a video game. Does look something cool that you do it on your phone and you post on TikTok or Instagram. But in reality, when you're dealing with real money, you have to remember that, you have to treat it as a business. It means that you have overhead costs, you have the operating cost, you have risk management. At the end of the month, you have to make sure how much you're gaining or losing. Is it worth your time? Are you beating the market? These are the questions that you have to ask. A lot of people are coming, they have some money, they buy some Apple, goes up, and they think they're a trader. But the question is, are you, for the amount of time and energy and overhead that you're putting in there, are you beating the market? Is it worth it or not? Just making money or losing money doesn't make you a trader. You have to look at it very systematically. How much capital do you need? Like opening up a restaurant. I need to buy this is my overhead. I have my staff. There are some good days, there are some bad days, there are some days that I have to close. There are some Christmas times that I sell really well. So all of these things are part of the trading as well. You have some days that are really good, you have days that are really bad. You have to have the right equipment, you have to update your equipment. So as you see, it's just exactly like a business, but it's an easier business to start. If you want to start a restaurant, it's much harder, but if you want to start a business in trading, you just open up an account and a computer and a couple of screens, and then you're good to go. But that doesn't mean that it's not a business. It's just easier to set up, but it's very complicated, and it's very important to take it very seriously.
You're going to lose all that money. You're going to jump from FX, you're going to go to crypto, you're going to trade stocks, you're going to do this. It's all part of your journey. It's not a bad thing. You need to learn what you like. You need to figure out which market appeals to you. Maybe some market, you really lost a lot of money in it, but you really found it interesting. You need to explore, as long as you sort of understand, look, there's zero chance I'm going to succeed in this time or this time or this time. But what there is there's all this valuable experience that I'm gathering. I like the way crypto trades, or I'm really, really comfortable the way Forex trades because, it's much more responsive to longer term charts. I understand the long-term macro implications. I understand, maybe I want to do carry trading. And certainly that's one of the least intensive strategies because, it's essentially an interest rate strategy. So as long as you have a long-term suppositional view on interest rates, you're going to have a very good time in carry trading. There's a million different things you do. It all depends on your personality. So go out there, explore. I'm not a believer saying, you only got to do one thing and one thing only from the beginning, and that's going to give you success. It's almost actually going to lead you to total failure. You cannot focus on one thing until you've kind of wasted your time on many things. I think that's sort of, it's part of the human condition. You got to just really waste a lot of time and money exploring. But that's the joy of it. If you still find it joyful, if you still find it interesting, that's when you can really recalibrate your focus to the one thing that you think is going to do well.
It's a bit like a practice. It's a bit like, what do you do when you're playing badminton or tennis? You get a ball coming at you, for example. How do you respond to a forehand drive? You need to put it into practice so that it becomes an automatic response. And the key, as Russell says, is catching that thought. If you can catch that thought, which triggers the impulse to do something that you ought not to do, that's what you've got to catch. And once you've caught that, once you get into the practice of catching that, then everything else falls into place. It's like catching that thought that's difficult, that bodily response that says, I'm feeling, we tend to feel anxious. We tend to, my heart starts thumping, I breathe more quickly, whatever it might be. We all have a bodily response to the alarm that gets triggered in our brain. And if we can identify it, and that's the hard part, but if we can identify it, then the rest tends to become a lot easier. So in answer to your question is, the first thing I would do is try and identify what is my bodily response that tells me I'm now about to do the wrong thing.
There are two things you need to do to make your trading strategy successful. You need to test, you need to trade your strategy, and then you need to trade yourself. Meaning you need to, when you're taking a journal of how your strategy is doing, you also need to take a journal of how you are doing with that strategy. Because that's the thing that people always forget. There are two variables in the game. There is, your analysis of the market, and then your execution of your analysis. And your execution of your analysis is always 100% going to be emotionally based. 100%. I mean, one of the things is that emotion is a feature, not a bug of human condition, which is very true. And once you embrace that, once you understand that there is no such thing as discipline or controlling your emotion or any of those nonsense terms that anybody tells you, because that's literally physically and psychologically not possible in human beings. What is possible is to study yourself sort of on a kind of outside basis and understand, I've seen this, every day this happens and I do this, every day this particular setup happens and I get suckered into taking it because I think that that's the right setup, but it's really not part of my stuff. So once you actually start to note, take, and classify your own behavior, your own patterns, the patterns of your personality, in many ways, I actually think are more powerful than the patterns in the markets. The patterns in the markets are actually, relatively easy to interpret, but to understand your own patterns and then modify them, because you trade yourself the way you would trade a chart. You say, oh, well, that's a dumb setup because of course it's not going to work. But this setup, if you do it, that's going to work. Speaking about FOMO, for example, FOMO was a huge failure of mine, and that in many ways what that entailed is that my algo has all sorts of like drop-down menus for each particular strategy, but it also has a drop-down menu for market, right? And anytime I used market as an entry strategy into the marketplace, that was generally a sign of my poor behavior pattern, because I was chasing something. I was not letting the algo take the trade. So that's what helped. I mean, I already forgot. I started ranting over what my question was, but I think the most important thing is I learned how to trade myself in conjunction with trading my own strategy. That's really improved my overall performance. It went from me making 30 unnecessary trades a day to making just 7 to 10 qualified ones.